Hello and welcome to today's NinjaTrader ecosystem event using OrderFlow to identify areas of liquidity. My name is Chris and I'm a platform representative in NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and clicking Get Started under the Welcome section. And before I turn the mic over to Leo, it is important to understand that foreign currencies, futures, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more of the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or a copy of the full CFTC risk disclosure, please visit this link. Also, please remember that these training sessions are not a solicitation nor a recommendation to buy anything, simply educational in nature. Thanks again for joining us today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Leo.
Thank you. Good afternoon, everybody. Hope you had a wonderful trading day. I see Amazon earnings came out after the bell, and that looked really fun. If you were involved in that, happy for you. Or if you were long into it, then I guess you might have some explaining to do to your broker. Today we're going to go over what I think is a concept that many people misunderstand. And it's this idea of liquidity. We often see charts that have, just standard candlestick charts where somebody will draw out, price action, highs and lows, and they'll talk about liquidity in the sense of, stop runs, right? And what we're going to do today is go into a little bit of detail on what we would refer to as liquidity from an order flow standpoint, because we're actually looking at the real liquidity that's transacted in the market. So we'll go ahead and get started. But before we dive into that, just want to cover, hey, who are these OrderFlow Labs guys? We're just a couple of traders. There's basically four of us, with a couple of developers that got together and created some tools that we wanted to use for our own trading. And we basically use these tools for our everyday trading and decided that, hey, they're valuable enough to be shared. And so we've been around for 3 years, and we focus on, from an order flow standpoint, basically two areas. One would be structural, so looking at the volume profile, and looking at, standard price action, candlestick type of things, as well as market profile concepts, and then executional, right? So that is going down to the order flow data that's coming in, the speed of the time and sales, or, how things are moving from the bid and ask, and trying to identify where sellers are initiating, or where buyers are initiating, or where we might have exhaustion. So some of the tools that we have, this is not all encompassing, but there's Delta Map, which basically shows you on a candlestick chart the delta as it's coming in. And we do a bunch of math to smooth that out over time. So we kind of clean up the data, because the raw data is very, back and forth, right? There's always kind of a battle between, the market with respect to buyers and sellers. And so we clean that up and we put some nice things in there. Then we have liquidity zones, which we're going to talk about today. We have auto plot, which is a full set of tools that really focuses around the market profile. And then we have the EAD and the dominator. Those are sequence-based order flow type of information. And so that's just looking at the speed of the time in sales and or absorption, short time frame absorption with kind of that counter move. And this is again not a compassing of everything that we have as far as tools go, but I did want to highlight that hey, we're more than what we're gonna cover today. So, what let's talk about this idea of liquidity. And the best way that I could frame it is from a trader standpoint. Um, you know, throw your hand up in the chat if you've ever, been looking at the market and the market's going, up and you think, okay, well, this is a great spot for me to jump in. The market's going up, it looks bullish. You jump into the market and all of a sudden the market stops moving. Like suddenly the market is personally toying with you, right? Like as soon as you enter the position, the market stops. If that's ever happened to you, trust me, it's happened to me as well. And what you may have found yourself in without realizing it is that you're stepping into an area of high liquidity from the opposing side of that transaction. As you know, every market, every transaction has two parties to that transaction, right? If you buy the market, somebody had an offer there to sell it to you, right? So you always have to keep that in mind that it's not, you know, there's that joke about why does the market move? Well, there's more buyers than sellers. Well, to be there can be imbalances that drive the market, right? But there's always a counterparty to your trade. You'll want to remember that. That's just how the nature of how trading works. So let's define what that liquidity zone is, and then we'll dive into some of the details of it. So just basically, a liquidity zone is an area in the market where there is a pause in price movement due to an accumulation of delta. And so when we refer to an accumulation of delta, we'll see some examples about, we're looking at a volume profile that's doing the math of the ask minus the bid volume. And so that gives us the delta of how much was done, how much business was done on the offer versus how much was done on the bid. And if you don't understand we're going to go into that too. So don't worry. But really want to call out that in order to spot these areas of high liquidity, there's really two things that are required. One is a lot of delta accumulation, and then that pause in price movement, because we can see plenty of scenarios where the market is moving through areas, where let's say the market's going up and, buyers are lifting offers and lifting offers and lifting offers. We may have tons of positive delta as the market's moving. That's not necessarily enough liquidity to pause the market. And so just because you have a ton of positive delta doesn't necessarily mean that that area is enough to cause any type of stall. So we use stall and price movement to kind of validate that buyers are running into an area of enough liquidity that's kind of causing this pause of the market to go up or down. So again, and just what's causing the pause, the market's going up during that move. There's buyers lifting offers that continue to push that market higher. And at some point during that move, there's an area where passive participant. So we understand that when you buy the market, there's two, intent and how you transact are two different things. But let's just assume for simple explanation that in order to get long into a trade, that generally you're going to lift the offer, you're going to mark it in, unless you're using the, just sitting on the bid waiting to get filled. Those people that are actively lifting the offer, buying at the at market, those would be considered active, right? So they're aggressors. They're aggressing into that offer. The passive participant is the other part of that equation. So that would be the limit order that's sitting there on the order book. And this will make a lot more sense if you don't know what I'm referring to here in just a minute. So, in this scenario, the market's going up. We bought the market. There's a passive seller just sitting on the offer and reloading. And so we'll talk about what reloading is. And basically, this resolves in two ways. Either buyers can push through that liquidity and the market continues higher. It's kind of a non-event, or buyers cannot get through the area of that passive seller, and because of this, the passive seller has too much, firepower for those buyers to get through, and we'll see counter rotation to the downside in this scenario. So it's that second part of the equation that creates what we would refer to as a liquidity zone, or maybe you might hear the term trapped traders. Um, that's what we are looking for, in this sequence of events from an order flow standpoint. So just visually looking at this, this is a um, point and figure chart, so you can't necessarily see that there's a pause in price because we're just looking at a very long time frame chart. But the idea here is, we have this up move that we can see clearly that runs into tons of offer liquidity, and that actually, paused. So you can kind of see it here, just below this. We push up through into this area of high liquidity, and then we consolidate below it and then rotate away. So it's that push away that then would create this zone for us to go, all right, when we come back to this area, we want to look for that offer side absorption again, or some type of trigger, maybe that would get into a trade for that counter trade. And the idea being, one, it's an area of interest from an order flow standpoint because we've seen what's happened at that area in the past. So that gives us an area of interest for, to look for. And then once we get up there again, we have an idea of what we're looking for on that retest of that zone, because we assume, if you buy into the idea that there's trapped traders up there, in order to get out of their position for break even, they would need to exit their position by selling. And so that creates selling pressure. And then the original participants that were able to absorb all that buying, assuming that they're still interested in the same area, they're likely to defend that trade. And so we've seen, enough of these examples, all throughout the years of my trading experience, along with everybody else within OFL. To this is one of the most popular tools that we have. And what's cool about it is it's not a black box thing. It's not, there's no secret about it. We are literally automating the ability for you as a trader to give some criteria, how much delta, how far away do we have to push, what color are my zones, etc. um, so we have basically give you all the tools or the various conditions to draw these automatically for you on your chart. And that way you don't need to stare at a footprint chart all day. It will just show up on your standard, execution chart, if you will. So here's another example of, we have some delta accumulation down here. We get a push away. We get this really quick retest, and we're looking for that test to, for a long. And so in this area, then we push away. And so that's the idea of, the liquidity zone, working. Obviously, this is just a perfect scenario because it works, great, very fast. But, just to kind of reinforce the idea of what we're looking for. Okay, so let's talk just a minute about, I said active or aggressive participants. We talked about passive, participants, and then delta. So just wanted to kind of define what those things are. So again, delta is the ask volume minus the bid volume at that price. And so here, just looking at ES, at an example from ES at 5170 in this scenario, we had a delta here of 2587, and then we had another one here of 2056. And so if we're looking for this area, we would want to see price stall before that would before that would give me any consideration for a trade. So delta does not necessarily just mean, if it's a large amount of delta, that doesn't mean there's a trade there, right? That's information part one. And then information part two is, does, are the buyers having a hard time getting through that area? But we have to be able to identify the first before we can identify the second. And so that's what delta is. So we use these, these profiles on execution charts as well as on our depth of market to allow you to, see that information in a couple of different ways. So let's go to the other side. What is the passive versus aggressive? Like, what is that all of that about? So any depth of market is basically, this is the order book, right? So if we're talking to yes, we have bid side limit orders and we have ask side limit orders. So this would be, people that have offers right here at 98.25 and their bids here at 98. There's 11, so we can see the quantity, and we can see which side. And so in order for, the market to move from, 59, 51.98 up a tick to 59, 50 or 59, sorry, 51.98.50, we have to take out these 7 lots on the offer, and assuming they don't just immediately refresh, if we bought 7 lots here, the price would likely move up one tick. So, these passive participants are a bigger part of that story than the aggressive participants, because those are the folks that, typically they put on, size in what I would say in an invisible fashion. As you guys have probably watched a few DOMs or depth of markets, you'll see price coming into an area, and there's 73 lots right here on the bid, for example. But when we get there, all of a sudden that 73 gets filled, and then there's another 100 and then 200, and your time in sales is going crazy with orders being filled on the bid, and then all of a sudden, your delta profile shoots over, right? So that is invisible liquidity. You can't see it because those participants are using, different algorithmic type of systems to put those positions on or get those fills in. That could be iceberg orders, that could be, time-based execution models, etc. That's really not that important. What's important is how the market reacts to all of that liquidity being put out there, right? So if we see 4,000 lots on the offer done between this 69 and this 70, that's cool. I mean, that's cool that you can spot that. What you really should pay attention to is how's the market respond to all that offer liquidity out there. We can, go, oh my gosh, there's 4,000 lots for sale. in ES, I should get short right away. Um, that's definitely not the case, right? We always have to measure or consider how the market responds to this information or to that data. Because the great thing about futures is the order book's centralized, and so we can see, um, everybody's looking at the same data, so nothing is shocking. No, there's no, backroom deals on in the futures market. It's all done in the same order book. So for us, the liquidity zone, there's kind of two criteria that we talked about earlier, right? We have to have certain level of delta, and so we have recommendations for how to where to start as far as using our study. But generally speaking, for NQ, I'll speak in NQ terms. We have ES settings as well within OrderFlow Labs. But if you're looking at ES and you're looking for, hey, what's meaningful in NQ? Again, we're using tick compression. So every block that you see here is representative of basically 4 points in NQ. Because if you looked at every single tick, you're just not going to get great data. And so we compress that we compress that. And so we're looking here for a single block, a compressed data of 180 delta, and then a zone threshold of total of 400. So basically, we're saying, I just want to see if the total delta in the zone that I'm looking for, so 6 blocks here, if it's above 180 and the total is above 400, and then we push away from that by 20 points, that's going to activate a liquidity zone. And so we can see here it sums it up for you and tells you, hey, there was 495 on the offer at that price. And so that way you can make, informed decisions about when we retest that or when we push away from it. Some people will take some of these trades as soon as we push away from it as more of a momentum type of move. And then others will use that retest. It just kind of varies kind of what, how you use your settings. Then we also have a detected zone. This has become, I would say, less popular because the next thing we're going to cover here in just a minute is the what we call leg to leg profiles. And so because of I guess not an invention, but just the way that we're looking at delta from a leg to leg standpoint, we're not really using the detected zones anymore, but it is available. And basically, the only difference between a leg to leg and a detected zone versus an activated zone is that the detected zone is the only requirement it's looking for is that delta threshold. So again, one block of 180 and a single, the whole zone of 400. If any bar meets that criteria, then you're going to get a zone print. It doesn't take into account any push away, but some people like to see that in real time versus waiting for the market to move and then oh gosh there was a ton of offer delta there, so that's one way to do it. But as I mentioned, we have other tools that are more helpful within that capacity now. And so again, just kind of reiterating, high delta does not equal absorption, that there's more to the story from that standpoint. Here's a bit of nuance. Trend days, generally difficult for some day traders because the market just goes in one direction for pretty much the entire day. One thing that we have, and a lot of our traders use the liquidity zone just basically to identify that trend day. It's basically when liquidity zones are stacking, like you can see in this image here. Basically every time there's a little pullback, the bunch of bids get slammed in to those pullbacks, and then the market continues to march upwards. And so when we see this and we're looking at our execution screen, we see a bunch of stacked liquidity zones, either to the upside or downside. that gives us a great clue that, hey, it's the market's obviously going in one direction. There's a lot of, bid side liquidity on any pullback if we're going up, or offer side liquidity if we're going down. And so I want to trade in the direction of that market. And so they're not necessarily using the zone for an entry, but they're using it as a way to frame and give context, as far as to what's happening. And then in addition to that, you can use single prints, which is also a study from market profile, or a concept from market profile that we use to help identify that trend day. And instead of trying to, fade those big moves, join that, get on the bus and join those trend type moves, and get more comfortable with trading in, those one-way auctions. So now we're going to cover real-time absorption. So earlier I said, here with the detected zone, we're printing, if your threshold gets met, we're going to print a zone. Now we're going to talk about a different way to see that in real time, and that's using what we refer to as leg to leg delta. So what is a leg? It's basically when, the market moves obviously in, rotations, right? And so we'll have an up rotation, we'll have a down rotation. We'll measure those over time and we give traders, an average, like the average NQ rotation is 90 points, or the average ES rotation is 14 points, or, then it could change over a period of time. And now it's 6 points, 60 points for NQ, or 5 points for ES. Gives you an idea about the conditions. And we use those to tell us how to draw and redraw, the anchor points for the leg to leg. So basically, if this low, basically rotates up, say 30 points, it's going to draw a volume profile from that low. And then if we make a counter move to the other side, it'll then re-anchor that, new leg to that swing high. And so we're just tracking the, leg to leg, volume profile basically, but looking at it from a delta perspective. So let's talk about how to use absorption in real time. And this is, there's basically, again, I've stated, you have an area of consolidation. So think, hey, this is a process, not an event. So this is something that you want to watch for over time. And you're looking for two things. You're looking for a lot of delta. So you can quantify that, by doing some math, some mental math, or you can use the liquidity zone study to do it for you. And then price not moving. So that's the key component. And so you want to look for, the other thing that kind of a little bit more nuanced in that is you look for rejection activity at the highs or the lows. So like in this example here at, 18,440, we have all these wicks here at the highs. And what would we have up here is a lot of offer side liquidity. And so that is, a really nice look at, what real time, how to spot that real time absorption. So you can take some of these, opportunities in real time and not necessarily wait for a retest. Or maybe if you do get a retest, you add to that trade for continuation. So just one thing I just want to call out is that absorption is a process, not an event, whereas exhaustion is definitely an event. So again, kind of the same idea. We have this down move that starts to consolidate, and we build tons of negative delta. And with that consolidation, there's no price movement. And so we're looking for counter move of this down move, back into what targets you might have, or if you're a volume profile guy, you may target the high volume node on your profile as kind of your final take profit or whatnot. But basically, this helps you identify when that absorption is happening in real time. So again, look for those rejection spots, practice patience. It is a process, not an event. And as soon as you see tons of negative delta or positive delta does not equal, I'm ready to take a trade. Because as you can see, some of the best scenarios where these play out is there's lots of time that, it occurs via time versus some type of event, where exhaustion takes place. So the other scenario is, you have all this absorption and then you get a little stop run of that absorption spot, and then it, reverses. How do you know if one's going to happen or the other? You really don't. Um, and you kind of have to be prepared for both scenarios. I think, from an execution standpoint and trade management, that's up to you to work through that. We describe various ways from an execution standpoint, how we do it as traders within the OFL community. But just consider that this is, one scenario. Another thing that does happen from time to time is we'll have all that absorption, that we'll break that low, and then we'll come right back through. And so you'll want to, consider that as kind of an alternative setup. And then finally, obviously, it's totally valid for sellers to break through the level and never come back. We don't ever see a reversal back into that zone, and that could even then become resistance because now you have a really large amount of consolidation where a ton of bid of liquidity was available. And once that gets broken through, then this becomes, an area of interest. So it does work in, multiple ways, but being able to identify that is key, is pretty paramount. So I have an example here that we can work through. We'll see if we can get the resolution up here. It looks a little fuzzy at the moment. That looks better. So one thing I just point out right now, we see, this amount of lots of delta here, but price is still going. So this is, good information because you want to kind of build a story over time. But I wouldn't ignore this data, but I wouldn't be ready for a trade just yet. You want to keep this into consideration. Now, if we start seeing more absorption here or more high delta in this zone, then we want to consider, taking a counter type of trade. And so what I look for generally is we have this push up and now we're starting to consolidate here. I may consider getting into a short position, um, based on what I'm seeing just right here. And so that's one way, right, to use this in real time as we're seeing, okay, we had a bunch of offer liquidity, they pushed through it. Now they kind of have stepped up here. And so, being able to identify this is key. So here we had price movement versus here at 52, we had no price movement. And so that's the component, that's really important to consider while, looking at this in real time. And then your liquidity zone, or if you're, manually marking these out, then you would want to draw this area as an area of interest going forward, because we have seen, that be more of a responsive, activity, right? Or passive, there's passive activity here, and then, finally the market starts to respond to it, here in a negative fashion because it's going down. What is the time frame of your delta profile? There's no time frame. These are based on rotations. And so from the bottom here to the top of this, right here, it will be drawing this volume profile from whatever the anchor low of this leg is. And then here it just resets. So you see that real time reset is once we made that counter move, now we're tracking that delta profile from the high of this leg So we can still see that absorption that happened up there, but now we're watching the new delta come in, on that down move. So we can see, here, I'll go back to this. We can see what happened and what's happening as we push to the downside. Because if you're in this short trade, what you want to look for potentially for an exit is absorption from the counter side, right? So we look for bid side absorption. And so now we're building this delta profile from this high. And now all this that we're seeing is new information. We're not looking at any old information. And so that's important to be able to see, as long as price is going down with delta, and we can see that, there on your time and sales, you're going to see tons of, bid side delta coming through or bid side activity coming through. And so you're going to, see that in real time on the actual chart. So that's that's the idea of utilizing liquidity from an order flow standpoint. Two different ways to look at it: one in real time, one that gives and automatically, allows you to point to zones of interest based on that same concept. And I'm going to pull up a chart here and we'll look at today's activity. So, and I do have one of our other studies on here, Delta Map, along with the leg to leg profile. I have this set to visible bars so that we can see what that study is doing and, how that's working. So here's an example right here from this morning. We breached the overnight high, if I recall, and we had this price pause, and we had like, I don't know, 800 of positive delta up here. We get this push away, and then we're going to draw that zone. Um, we don't always get it perfect, retest, but when you have these areas marked, you're kind of looking for that that reentry. Funny enough, we had the same absorption in here at 21,790. This is NQ from today. That gave us a liquidity zone, as far as a bid side goes. But the main trade that I would be looking for on this type of day would be this reoffer from this high. And what's great about this is we get, an execution tool from one of our other components, Delta Map, that's basically showing you, hey, we pushed up and lots of positive delta, and then there was an extreme move from positive side that then flipped negative. So that's what that star means. But our primary is looking to spot these areas, and then what I would use this for is to cover a point to take profit, and then just kind of reassess. So then as we progress further, we see here, if I can draw your attention to this activity here, we have, lots of negative delta that comes in to this spot, gets reversed pretty hard. And then we get a retest of that same zone later of the same area, and we get another delta flip. So that's one of our other tools. What we look for are areas of order flow, right, for zone of interest. And then, secondly, we're looking for, okay, when we get here, it's not just automatically I'm taking the trade, but I'm looking for, something that could get me into that trade, some type of trigger. And so for us, this would be one of those, more executional because it's faster time frame to look for this type of, entry, right? And then we had this liquidity zone right here from this little consolidation area, gave a little response that got pushed through. And then that primary one from this morning still ended up playing out, and we got that liquidation. I think that was a tariff related thing. Those are going to be a common. occurrence. But yeah, I mean, essentially, this is what you're looking for, these larger areas of where there was so much offer liquidity here at a logical area, right just above that overnight high. And so you want to pair this with, market data, market generated data, and say, okay, well, logically, we pushed through the overnight high. We found a ton of absorption, from the offer that rotated price away from it once, twice, and then a third time. And, if you're in this short here, it's probably a lucky, more of a luck thing because of, some of that news played out today. But, you're still using the same mechanics every time, right? And I think that's important to kind of notate. And then here we have the Amazon, or the end of day activity. We actually saw more absorption at the end of the day into, right before that Amazon print. And oddly enough, I guess we retested it and, had a nice little, 30-point trade off of this. So this is the core of one of our favorite studies, the liquidity zones. It's incredibly beneficial because one, you have a ton of flexibility in how you set it up. So if I go into the study options here, we can, in the background, we can look at different, bar types. And so you can use, we recommend volume, or and point and figure. We have two configurations that we recommend there. Um, and then we also have, Renko, Ninja Renko, etc. Um, you can, specify the periodicity. You can, specify, what you're looking for as your thresholds and all of the different colors and, things that you can look at. One thing that's really nice about this is that the the buy and sell, they're marked buy and sell zones. I'd just say, the area where you would want to be looking for a buy or a sell, they can be different colors based on if they've been touched or not touched. And so that tells you if you make them different, um, different colors, if we've already touched this area of liquidity once, then on our retest, we're not necessarily that interested because, when a price level gets tested, the more it gets tested, the more likely it is to be taken out, right? And so you can mark those areas of interest one color if it's just, hey, it's not, active, it's been untouched, and then another when it price has traded into that zone. And so then it would change, colors. And so you have full control over those things. And then just for the demonstration today, I turned on, showing all of the old levels. You can definitely clean up your chart just by, saying, hey, if we remove a price level by trading through it, we're just going to, that price level is going to be gone, right? So now we just see the levels that are currently active on the chart. But what this does is allows you to, as a trader, go in here, turn on um, the clipped zones, and then do some, manual back testing to figure out what are the settings that you want to use for your market. Because obviously all markets are different. What's important for Delta and NQ is certainly not important for ES and all other futures markets. And so you'll want to come in here and customize it not only to your market, but also your trading style as well. So there isn't a one size fits all approach. And that's why we give you the control of being able to, really configure this thing how you want it to work. So we explained, concept to you, give the tool that basically executes on that concept, allow you to configure the various settings that that would be conducive with your trading style, risk strategy, etc., as well as your market. and then the tool just works, for you in the background. This allows you, again, just to focus on trading and, not a footprint and not all these various things that are out there. And so that's kind of the key thing. And then that leg to leg profile, again, another one of our tools is allowing you to see that in real time. So we can see before that, this liquidity zone was drawn here, all of that absorption right up here into the 870s where price was going sideways. Now, this is end of day activity. I would, more or less ignore this trade for me, but it's an example of what we're looking for in a normal day anyway. So when price taps into the liquidity zone followed by delta flip, that's an optimal entry. Yeah, I mean that's really a great clue, because you have a zone of interest, but you want to see something that really gets you into that trade from an execution standpoint. And so that could be a simple, hey, I've got a blue delta here that turns into sell delta, so that could be one other piece could be, the delta flip. We also have other execution components. So there's one that's called the EAD and the dominator, that may, we're looking for execution things to fire off at our areas of interest, because that tells us that, hey, we've identified an area of interest, and now let's watch the order flow when we get to that area to tell, to give us kind of a trigger to get into that trade. And so, yeah, you would want to use some of those execution tools, to kind of use that study to its full capacity and not just blindly, take a trade on a retest of a zone. All right, so back to the charts. Just want to see if you guys have any questions. And again, we covered, maybe two or three different tools that we have from an order flow standpoint. Again, we're focused on, structure. That's kind of the primary. So identifying areas of importance, areas of interest. We do that through a variety of ways. And then our structure execution tools are, that's the fancy, arrow up, arrow down, delta flip star, et cetera, et cetera. Um, and so that's kind of our focus, from market structure to order flow that consolidates all that data for you onto your charts and gives you something that's actionable in real time. So nothing we use is moving averages or lagging data. It's all from the underpinning of how the market's moving internally. If you're to look under the hood. So our Twitter is at OrderFlow Labs. We also have a YouTube channel that has a lot of great content and some old trade live stuff. And then there's actually, if you go to our website right now, we have a promotion that we're running for anybody that's on this webinar. It will pop up right on the page, but it's a nice discount if you're new to OFL to give us a try and see if there's something that we have of value to you as a trader. And so that's available to you for taking a look. So before we end it, I'll just see if there's any Q&A. I don't see anything pending in the chat, so I'll give you guys a moment to type any questions if you have them, and then if not, we'll go ahead and wrap this thing up. Do we have any automated strategies? No, we don't. We provide various tools, both from structure and execution. We don't really delve into the automated strategies because that's a very personal thing. And that's just not within the bounds of where we spend our time. And so we're not really focused on any automated strategies. Do we market depth indicators? Market depth is just part of the market. There's really no indicator for that. So I would just refer you to the Super Dom from NinjaTrader. You're going to have full market depth from your data providers that are giving you that information. Kinetic, the Kinetic data feed has options to get full market depth. Are there manuals with the indicators? Yes, there are manuals. So when you join OFL, you're going to get an invite to our Discord, and our Discord is basically where it houses one, getting license access, and then two, there's an entire community of traders where we do morning prep, we do office hours twice a week, we do live sessions twice a week. We have dedicated channels for NinjaTrader and the other platforms we support, as well as EDU educational channels for everything that we have. And so you're not, just signing up and here's a bunch of indicators, good luck. We're very, hands-on and involved, and there's an entire community to help answer questions if you have questions. And we also have example, books available to you, templates, workspaces for NinjaTrader that you can, from sign up and get the workspace, and the workspace already has things configured for you. So you have examples to work from. What is the name of the NQ indicator you were showing? Are you referring to the delta map with the star flips, or the leg to leg profile, or there's basically we looked at three things. There's the delta map that has the delta information in the candle, that has, some execution components to it. There's the liquidity zones, and then there are the delta profile. So that's the three things. There's a lot more than that in the package that we have. And so you actually get access to everything, if you decide to, take a look at what we have at OFL. So you don't have to pick and choose or anything like that. It's just you get everything that we have, for both structure and execution, in one singular package. It's just on their website, you'll see, it's just it's the only package that you can get. You would just say, I use NinjaTrader, and it will just show you, that's the NinjaTrader package. It's just called OFL for NinjaTrader. You bet. If there are no other questions, we can go ahead and wrap it up. I'll turn it back over to the NinjaTrader team. I want to thank you, everybody, for joining and going through this information. There's a lot of really good trading data that you can get by looking under the lens of, via the lens of order flow. And so hopefully this was a, informative, realistic way for you to use, some of this data and some things to think about as you consider, what you're doing with your trading in your trading journey. So with that, I'll turn it over to NinjaTrader.
Thanks again, Leo, for taking the time to share with us today. Everyone in attendance will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. And we'd like to remind you that the information provided in this was that of OrderFlow Labs and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.